Okay. Well, actually, Rajat Rachgaria has joined us from Motilal Oswal. He's the Managing Director, Institutional Equities. Good morning, Rajat. Thank you very much for joining us. Just a couple of minutes for markets to start. So the first question really is, do you think the market is showing a bottom at that 7920 mark? Are you all buyers?
Well, in the very interim, yes, the markets have shown a bottom. Actually, I have been surprised by the resilience of the market because the near-term impact of this news has been so severe on the corporate space that the markets could have gone down. But I think generally, globally, markets have been quite strong. EMs have started seeing some flows. So our markets have also seen some rebound. So right now, for the time being, I will be surprised if we break that recent low that we made last week. So that's why markets are into some recovery mode right now.
Okay, Rajat, morning. Would you buy any of the auto stocks now, or do you think that there's still more correction to go as the demand pressures continue?
Well, rather than now buying every auto stock, I think you'll have to be more selective on whether the demand recovery will happen sooner, right? And I think within the categories, commercial vehicles will still see recovery happening later than some of the other categories. Passenger cars may have seen demand being merely postponed and not cancelled. Again, I think at the rural level, given that the expectations from the rural post this monsoon has been good. Again, tractors may have seen couple of months of postponement, but you will see recovery coming back again. So I think within that auto pack, M&M, Maruti are the two names where one can still be more constructive right now.
Okay, actually, if you know all the money that was supposedly black is successfully laundered and comes back, logically consumption should not be hit. But we'll discuss that point with Rajat in a minute. Market's about to open. Anuj, you wanted to say something?
No, I was just, I wanted to ask Rajat a question on NBFCs, but we'll wait for that. Let's let the markets open because now just about 15 seconds left, Lata, and looks like we are in for a good opening. At this point.
Actually, the mid-caps are showing a lot of verve, pre-market at least. Let's see whether they are able to hold on to their own. The index itself is likely to open with 1/3%. Yes, 1/3% in terms of gains. Oh, quickly it has gone to 1/4%. So 8160 is holding at this point in time. That's a 0.2 gain. No, that's given up. 8157, 8158, 8155. That's 0.1615 higher for the Nifty. The Sensex is gone below the 26,500 mark, 26,450 as I speak. That's still 1/4% higher, but Nifty is moving towards 8150 with some alacrity. Now 0.13 higher, 0.1 higher, 8150 as I speak, 8151 if you please. So that's the level where it is seeming to find feet in the first 10 seconds of trading. Okay, what's doing badly? Easy to guess that Tata Power is doing badly. Z Entertainment seeing a little bit of shaving off. ITC, HDFC, Wipro, Hindalco, ITC, Tata Steel. Actually, the metal names are taking a little bit of a knock after the global profit taking. But let's look at the green stocks as well. Lupin starting higher. It's got something going for it. It's not just the new drug, but the fact that it's got permission to import that drug from Goa. That's bringing it a little bit of good cheer. Asian Paints up 1%, Aurobindo up 1%, GAIL 1%, Eicher Motors, Adani Ports, Ultratech Cement. So pretty much the stocks that even Mr. Tulsan was talking about. Cement is doing a comeback. Solid consumer companies like Asian Paints is doing a comeback. Well, Auropharm also has been doing well. Among the techs, what have we got? Tech Mahindra is doing somewhat better, but otherwise not a whole lot of tech stocks. Actually, today it looks like cement is doing well, and some of the banks like Yes Bank, Bank of Baroda. So actually, Bank Nifty is not done too badly at all. It's 0.5% higher.
Oh yes, in fact, now 1% equity, by the way, has changed hands on Bharat Forge. That was expected. 2% equity has changed hands on IDFC Bank. So both those stocks are now in focus. Bharat Forge down 1.5% and IDFC Bank down almost about 3%. But mid-caps are soaring now, so up almost about 0.7% for the mid-cap index. The advanced decline ratio is very good. One of the stocks of the day is Vivimed Laboratories. That stock is up almost 14% on the back of its Chennai plant getting successfully inspected by the US FDA. That's up in the green. You have SL Propack. That's a stock that has been in a bull market of its own. It's up 5% now and has hit a fresh 52-week high. By the way, just keep an eye out on the frontliners as well. The Nifty might just be in the red before you know it, because it's hanging on to the green line by the skin of its teeth. Quickly on to some more stocks in the broader markets, because that's where all the action is. Some of these real estate stocks have picked up. So Ajmera Realty is up almost about 11%. You have some of the auto ancillary stocks. Remember, this is one space that Mr. Tulsian was very bullish on. So names like Apollo Tyres doing well this morning, up almost about 2%. Biocon up in the green. NBFCs like Manappuram Finance, Bharat Financial Inclusion also doing well. But it is still the struggle that we have for the frontliners.
Yeah, I think 8150 is proving a bit tough for the market. Torrent Pharma is up, by the way, 4.5%. That was, of course, the stock to watch in the morning as well. And for the market, the Bank Nifty is also slipping a bit, but still outperforming. Let's take first thoughts from Ashwini. Ashwini, market opening. In the zone now, what do? Buy or sell?
So you've sold into Bank Nifty. Chances are we'll retest yesterday's low at least. I don't think market is showing too much traction. Individual stocks, yes, Asian Paints, Lupin, etc. could do well. But overall, the big trade in the morning is sell Bank Nifty, and will probably make 100-150 points on the downside.
Okay, gentlemen, thanks a lot for taking us through the market opening. Let's get back to Rajat Rajakaria. Rajat, good morning. The space that's made a big comeback is NBFC. So two-part question. A, do you think the concerns were overdone, and that's why we've seen relief rally? And B, of course, how much more to go from here for these stocks?
Well, NBFC has been one of the first bunch of companies which have been hosting calls to calm down investors' fears. The story pre-November 8th was all these companies were growing at 30-40%. They were trading at 3 to 5 times price to book, 15 to 25, 30 times earnings. This just puts some brakes to that accelerated growth, right? All these companies now go back to their drawing board, try to look at the segments, the risk that can come. So what all of these things does is slow down the growth in the near to medium term for these companies. That 40% growth rate comes down to probably about 20-25. But I think structurally, if you look at the entire demonetization, the organized financing business just gets more and more stronger. So whether you have business models like a Bharat Financial or a Muthoot Finance or an LIC, right? The target audiences for them just gets more. So I think you need to be more selective to buy NBFC now compared to pre-November 8, that almost any and every NBFC was just getting re-rated and was into a chasing mode.
Okay. Rajat, the long and the short of the demonetization, how has your research team received it? Which stocks are you worried about at all?
Well, I'm of course worried about spaces where I think the business models will take a lot longer to recover right now. There are two kind of, this comes and impacts right at the discretionary front. And within discretionary, you can actually now recoin the terms into two phrases. One is which is necessary discretionary, and second which is luxury discretionary. The high ticket value items will see postponement right now. Slowly and slowly we were thinking that media will start becoming a more necessary discretionary. You will start seeing branded apparels at the bottom of the pyramid becoming more necessary discretionary. But maybe luxury cars, things that you can postpone for a year, I think a lot of the people would like to delay it for some time. Secondly, I think this whole trend within the banking where retail lenders last 4 or 5 years gained significant prominence over the corporate lenders. You just may see that little bit of reversal happening into the market share, where corporate lenders, and I'm here essentially talking about some of the PSU banks also, where the focus on liability franchisee can become so strong that many of these stocks can start looking to outperform the banking index.
We spoke about the consumption.
Just a minute. I think this is an important point that the currency market has to take note of. a total of about 26 billion FCNRB deposits were collected by Indian banks 3 years ago, that is in 2013, and that big outflow was seen pressuring the rupee. $22 billion have moved out. So now it's like, it just doesn't matter. It's not a mean achievement. It's come at a time when, the Trump victory actually put pressure on all emerging market currencies. It's also come at a time when demonetization was announced and should have put pressure from equity holdings as well. But this outflow has weathered both those storms. That's a measure of the resilience of the rupee. I would assume that after this news, you should actually see the rupee getting strong. Actually, it already has. It was at 68, 65, and now it's moved up a little. The dollar has weakened by about 0.1%. This is very, very important relief for the currency markets and therefore for equity markets, that the big pressure on the rupee is behind us. You don't have to worry. FII selling was really not much. It was the FCNRB outflow, and that's not a problem anymore. Okay. Well, Rajat, any comments on this? We have weathered a very big storm on the rupee.
Well, Lata, yes, that's of course a very important achievement. But nowadays we talk quite often in the team that the fear of the market is not from known, it's from unknowns, right? So FCNR fear was well known. The demonetization fear was unknown, right?
Fair point.
So the markets these days react more to events that you cannot forecast.
Fair.
And I think the next big event that markets have to weather is the December quarter numbers, where people are right now fearful of what companies are going to report.
Actually,
so
that
let's see
was
in another month or so.
That was going to be my question. How much are you trimming earnings, and in which sectors?
Well, Lata, you will have to give us a couple of more days because we are compiling all of the aggregates, and hopefully this week we should come up with a report which will give a full summary of which sector and aggregate level how the numbers are being cut. But I just wanted to leave one thought that the aggregate numbers may not see a meaningful cut because almost 40-45% of our earnings come from export oriented models, where you will not see any cut in the estimates because of this. And in the remaining 50-55%, you may see a bigger cut happening in the third quarter, maybe because of the sudden collapse, but otherwise full year numbers will not see any meaningful cut still.
Okay, well for now the mid caps are really picking up pace, so almost 0.8% higher, and the advance decline ratio has more than 1,000 stocks on the advancing side. Rajat, you spoke about how you like some of these consumption names in the auto space like Maruti and M&M. What about the two other pockets, paint companies and cement? Any picks there that one can still look into buying now?
I think the problem with cement was first the forward estimates kept on getting trimmed down every year for the last 2 years, but the valuations kept on moving up. Some of the large cap cement names started trading at a 50-70% premium to their replacement cost. What this event has done, it has at least normalized valuations for some of the companies. I think the big boost for cement will come whenever you will start seeing the SOPs coming from the government for housing. Housing will still remain central to the cement demand for the next many years to come. I would generally be positive on cement from FY18 point of view, and I think at least this correction makes people again start looking to pick up some names that they can, but it's not going to be a full sector call. You have to be very selective about the names.
Okay.
Second, you mentioned about autos, right?
No, the paint companies.
Yeah, paint names, right? In paints, I think again problem is valuations, right? You have 15% growth, but you have 35p, right? How do you make money in them? It becomes a 5-10 year story. So at least that is not a space which we will be very excited right now to own from the next 12 to 18 month point of view.
Rajat, since you had the institutional team at Motilal, what's the feedback on fund flows? Because we have seen consistent FII outflows. Some part of it is being matched by the DIIs. And do you think this EM problem has more legs to go in terms of this FII outflows?
Well, if you look at since November 8th, I think we got a little confused on how much of the outflows was relating to this whole demonetization, because EMs themselves were receiving large boots of outflows from FIIs, right? But in the last 2-3 days, while EMs have started seeing inflows again, like this week, Korea, Taiwan have seen $300-400 million of inflows. India continues to see outflows. So there are pockets of investors within the global markets who are still worried about India from a very near-term point of view. But that is more than adequately being offsetted by the domestics. And I am very positive on the domestic flows. I think with the fall in the gold, the interest rates, equities is the only place for long-term investors to come and earn any respectable double-digit returns from here. So I think the flows from DIIs in the coming days and months will only pick more pace.
Yes, I guess even original real estate buyers will now turn away from the sector, hopefully. Rajat, finally, would you brace yourself for a decent pre-budget rally?
Well, I think this time the budget rally will coincide well when corporates will come and keep reporting December quarter numbers and further temper down our expectations for the March quarter. So if the markets remain in this range of 8,000 to 8,500, I think we will weather this period very, very strongly.
Okay, Rajat. On that note, we will let you go. Thank you for that a bit of optimism in the market. For now,
decent optimism. 45% of the earnings are coming from exports. So aggregate earnings would not be impacted. That's an angle we haven't heard. It's very positive.
And two or three themes are playing out.